Hey, welcome back. Recently we saw several 7 to even 15% jumps in MPW stock price, and I think this is just a taste of what will probably happen once the Fed begins to cut the interest rate. This cut is going to help MPW because they'll probably have to refinance some debt in the following years, but also their tenants who would benefit even more. We see this 7, 8, 10, 15% jumps just from things that would lead to a rate cut. When that actually begins, I think this can easily more than double or maybe even triple in a year or maybe even less. Now, if you think this kind of growth is crazy, I think I talked about this before. In like 2018, I invested in gold miners, and when the price of gold jumped to 2000 per ounce, they tripled in like 3 months. Even a very recent example is Spirit Airlines, which almost doubled in 3 weeks following a trial that's not even over, and if it goes in their favor, they quadruple from that point. Or Meta would be the perfect example of market sentiment changing and the stock almost quadrupling in a year. What I'm trying to say is that this kind of stuff is possible and it happens all the time, but I also want to show you that for MPW this would make sense from a fundamental point of view. Despite all the issues of the tenants, MPW still makes 7 to 800 million in AFFO per year, which is very good for a 3 billion market cap. You can find 10 or even $15 billion companies who make just around the same. I get it if the company was losing money and there was a lot of uncertainty and risk because of that in case of some bankruptcies, but for the company's market cap, they are very profitable. A price to AFFO ratio of 4 plus an 11.5% dividend after cutting it in half is not something you see every day. The debt for next year is going to be covered by the recent sale of the Australian properties, so what I think is going to be the main issue is the debt from 2025 to 27. They have to pay a total of around 5.7 billion during that time, after which the debt becomes much more manageable. Recently they cut the dividend in half, generating around 330 million of savings, so let's say they make 400 million per year after they pay it. They presented these inflation-based expectations with the amount of cash that would be left after paying the dividend and interest expenses. They expected a positive amount of money each year and being able to refinance at 4.5 to 7.5% depending on the scenario. But this is before saving 330 million per year from the dividend cut, so they are already in a much better shape. So they should produce around half of that money by 2027. They can sell like 2 billion worth of assets over 4 years, which is like 10% of the real estate, and refinance the rest or even all that money, which is not impossible. What's very good is that if they want to refinance at less than today, they have the next year and even 2025 to wait for the Fed to cut the rates. If they keep selling assets at a profit and refinance a bit, I believe they can get over these repayments, after which they'll be almost debt-free. Also, if one of the tenants goes bankrupt, we have to remember that MPW owns the real estate, so what they lose is rent and maybe investments in these companies. But let's assume that every single one of their 50 plus tenants goes bankrupt, which is realistically impossible, and they sell assets to cover that 5.7 billion in debt. If they don't recover a cent in bankruptcy court from these tenants, they lose 4.5 billion, but let's round it to 5. What's left is basically a company with over 8 billion worth of assets and a very manageable amount of debt, valued at around 3 billion. Again, this assumes that every single tenant goes bankrupt, which means that the healthcare system in many countries, including the US, would probably have to go bust. Look, MPW is a very profitable company even in the current market, so once we see a recovery, which I think is going to depend a lot on the interest rate cuts, this should do much better. But until then, this can easily fall to 3 or even less, so we should be ready for anything. And who knows, maybe if we see a recovery, we can also see a short squeeze. As always, what I cover in my videos shouldn't be enough for you to make any investing decision, so please do your own research before investing in anything. If you want to see more videos like this one, please leave a like and even a comment to help me out, and make sure to subscribe. Thank you very much for watching, and I'll see you next time.